$1,537.50 in 10 minutes. And the best thing about it is you don't even need to take my word for it, because you are going to see how I did it live and in real time. But before we do that, we are going to spend just a few minutes looking at things I don't see any retail traders looking at: market sentiment. So whether you trade Forex, crypto, equities, or even commodities, sentiment or things not glaringly obvious on standard retail charts matter. And the biggest sentiment event of the month just happened, the November FOMC. So we'll take no more than a few minutes to analyze it, because it will influence how we approach the market. It's quite amazing that people trade without looking at a broad range of factors, but luckily for you, we only focus on professional trading here, so we cover all bases before putting our hard-earned money to work. So let's get into it. Okay, so as mentioned at the start of this video, we're not going to spend more than just a few minutes looking at the biggest event of the month, but it is important. We won't spend long, but it is important. I don't see hardly anyone looking at this stuff, but you're in the right place, so don't worry, we got it covered. And then we're gonna go into the live trade, all right? So you will see some live trading, it'll be amazing. But have a look at the factors that actually influenced our decision making, and it's going to be fascinating for you to see that. So let's get straight into it. So as I hinted at, it is the biggest event of the month, but what is it? Well, it's the FOMC meeting. It's just taken place. Why is it so important? Because they're setting interest rates, which you can see here. They actually stayed on hold, no change. It's important because interest rates affect every decision everyone makes, even if they're not involved in financial markets. Obviously, it will influence how much they spend, how much they save. That means companies make money, don't make money, and so on. It's going to affect every single asset in the world. You know, I said it many times, whether it's FX, equities, crypto, or even commodities, they're all going to be influenced by this decision. I already mentioned it. The Fed decided to stay on hold, right? So you might have thought that the reaction would kind of be muted, you know, not much reaction because they did nothing. In fact, it was the opposite. It was a big rally that we saw in the markets, in the S&P, and in fact, in most markets, we saw a big rally. Why is that? Well, initially the reaction was that the bond market sold off. Okay, so why that is important, so we'll actually have a look at the relationship between the bond market and the equity market, which you can see here. What we've actually been seeing a lot of recently is, so what you've got here, and I've actually put Forex on here as well as equities, because I know people like to trade Forex and so on, is what you've actually seen is the equity market has been going down, Forex market has been going down, which you see here in purple, the equity market in black, and at the same time, the green, which is the bond market, has been going up. Okay. Now what you saw when the Federal Reserve decided that they're going to do nothing is the bond market actually sold off and the other two markets went up. Okay, so do you see there's a relationship there, an inverse relationship between Forex, equities and the bond market. So no surprise, this inverse relationship. Can you see? The bond market sold off and the equity market went up. Really simple. Okay, I got this information for free from a website. You can see, again, just to repeat the relationship there. Why is that important? Well, it's important because it's going to determine the likely direction we want to trade in, right? If the initial reaction was for bond markets to go down, it's pushed other markets up. So if the S&P is going up, as you know, it doesn't matter what you trade, it's also going to push what up? FX as well, right? So even if you trade Forex, it's going to push the Forex market up, which is what it did. Okay, now we are going to be doing a trade on equities, but it doesn't matter. I just want to make that point that even if you trade Forex, this has had a reaction for you. So for the most interesting part of the video, the actual live trade, right? It's already suggesting that potentially we want to buy the market, but there's still a little bit more work to do. You know, nothing in life comes easy. We just need to make sure and kind of like, let's just understand why the initial reaction, right? We kind of know what happened. So we've got a tick in the box. What about why? Why did it happen? Well, one of the reasons is one of the FOMC members, well, actually the Chairman Powell, he said, longer term rates cannot just be a reflection of higher policy rates, but it does not appear that this is the case. higher treasury yields are showing through to higher borrowing costs, all right? It sounds complicated, it isn't. What he's basically saying is these higher bond yields, so that we were seeing here, that you can see coming into the meeting, these higher bond yields going this way, are impacting people's spending, okay? So even though that sentence sounds complicated, and maybe it doesn't to you, it's not. What he's saying is, these higher bond yields are actually having an impact on people's spending power. So he's kind of sending a signal to the market that, you know, maybe it's time you thought about bringing them lower. The market obliged brought them lower. What does lower rates mean? It means higher markets, right? You've seen this, lower rates, higher markets, okay? Do you see it's quite fascinating? Do you see some of this stuff, it won't necessarily be on a chart. It's quite interesting because you can see a lot of things that professional investors would be looking at that we don't see retail investors looking at, okay? So if you're not, you might be missing a massive piece of information that's going to be crucial to your trade, okay? This isn't about the news. I'm talking about the influence on your trading. It's so important you think about these things because it will influence your trade, okay? It's nothing to do with the news. It's how is it impacting your trading. And then just finally, I mentioned the seasonals. You can see here, November. So we've already got kind of a long bias, right? You know, we said potentially thinking about getting long because the initial reaction was quite strong to the FOMC meeting. The other thing to think about is seasonals, okay? So whether you look at the past 5 years, the past 10 years, the past 20 years, or even longer, the past 73 years, November is the strongest month for stock market, okay? So that also, history suggests that it's probably quite a strong month for all markets. Forex, crypto has obviously been quite positive as well, and then equities as well. So 2 reasons for us to potentially think about getting long. So let's get into the live trade. Okay, so as you can see for yourself, the market is moving. There's a lot of stuff going on at the moment, but let's just have a think about what's kind of going on. What's our game plan going into the market? Obviously, a lot of this will be quite different to what you're used to seeing on a retail chart, but we're doing professional trading here. But don't worry, anyone can pick this up fairly quickly. It is my live account, as always, there. Happy to show this stuff openly. I think it's important. But so we already know we've got a long bias. Okay, now before the FOMC, I did have a short bias, but the FOMC meeting is done now. So this is today. The meeting's already happened, right? We've got the decision. You can see we actually want to get long. You can see I've just entered my first long there. No particular reason, okay? The market is going up. I couldn't see anything unusual that I should be worried about, you know, in terms of should I wait, should I buy now, should I not? For the first position that I've entered into, the market's generally going up. We've got quite a strong bias going up. Couldn't see anything wrong with any of this buying. It looked pretty clean. You know, we've had this little pullback into this area of buying, and then we've pushed off it quite strongly, and no surprise, I've then entered, right? Because the market is, I haven't seen any issues, you see. I haven't seen anything that made me suggest, well, maybe this could fall off. There wasn't anything, right? It's just, we've seen some nice buying, we've seen a pullback into it, and these buyers have clearly added to their positions. Nothing sort of out of the ordinary that I should be worried about. Again, obviously, if you are using just normal candles, you won't necessarily see this information, but it just seems to me like healthy, normal buying. Okay, so I've taken my first position, no reason not to. What we now need to see is the follow-up. Should I add to my position? You know, should I not add to my position? What should I be doing? So to do that, you're going to see something very, very interesting, okay, that you won't see anywhere else, and therefore I think it's worth sticking around for. We're actually going to think about over the next, and it won't take long, maybe the next 5 minutes, and I will forward through some of it. Let's think about the next sort of 5, 6, 7 minutes, potentially even 6, 7, 8 minutes, right? I said about 10 minutes the trade would be, so let's think over the next 8 minutes, okay? So what I want you to see here is, down here, this is something called the delta, okay? Very straightforward. It's just the difference between the buying and the selling. Okay, so that's buying there, people buy. You know, when you buy on your platform, if it's a retail platform or whatever, you hit the right-hand side. If you sell, you hit the left-hand side. So it's exactly the same. It's just bid and offer. And this is, of course, just a normal candle like that, but it's just got more information in it. Okay, so it's just the difference between this and this. So if it's positive, that means there's more buying. If it's negative, that means there's more selling. What we're actually seeing here is the delta. See, can you see it yourself? 1,000, say about minus 1K, right? So there's more sellers than buyers. So you see I'm holding off because at the moment I'm thinking there's more selling, right, coming into the marketplace. Let me just wait and see. You know, does that selling actually lead to anything? Does it actually push the market lower? Right, so what we're seeing at the moment is, no, it's not pushing the market lower. You see we're climbing higher to 1,000, maybe 500 now. We can fast forward it a little bit. Obviously, I don't want you to sort of just hang around. I've just forwarded it another minute. Okay, do you see how it just jumped? The delta, just keep a close eye on that. You see it jump to minus 2.5. Okay, so we're seeing a lot of selling coming in, but look at the price. We're still at the same price. We're still in the same region, around 43.62, right? I want you to remember that price as we fast forward again another minute, okay? So we've now had 2,500 contracts selling, so a lot of selling. Okay, so it's actually another 2 minutes. Okay, so now it's creeped up, can you see, to minus 3,000. So I said at the start, you don't need to take my word for any of this. You can see it yourself. Look at that, minus 2,900, minus 3,000. So 3,000 more contracts sold than bought. Okay, it's not some fancy formula, nothing complicated. It's just more selling than buying. Okay, so I've actually added some more into this because can you see it's almost tripled? But look where we are. We're still in the same spot, exactly the same spot, 62.63, right? So people are selling, but the market's not moving down. Okay, let's forward it another minute. Okay, now can you see we've almost gone up to 4,000. Can you see within the space of 5 minutes, it's gone from 1,000, 2,500, 3,000, 4,000 contracts sold more than being bought. Now you might be thinking, Envy, that's very bearish, it's negative. It is. The problem is the market hasn't moved down. It's stuck at the same level. Now put yourself in this position. You can see I've started to buy a lot here. Why is that? Why am I actually buying even though there's a lot of selling happening? Because imagine you're a seller, right? And you sell. You sell 1,000 contracts. Fine, nothing's happening. You sell another 1,500 contracts, so it's now 2,500. Nothing's happening. Okay, let's try again. 3,000. Okay, let's try even more. 4,000. And what's happening to price? The same. 4,262, 4,262, 4,262, 4,262, 4,262. The price just stays the same. You tell me if you sold 4,000 contracts, you know, we're talking institutional level of selling here, and the market did not move, right? You sold 1,000, doesn't move. You sold another 1.5, doesn't move. You sold another one, it doesn't move. You sold another one, it doesn't move. You're going to start getting nervous, aren't you? That maybe I'm in the wrong trade. Now that's if nothing happens. What if the market starts actually moving against you and you've got this much risk in the market? You know, you've built up from 1,000 all the way up to 4,000, right? You're going to get very, very nervous, and you're probably going to start getting out of your position. You've built up such a big short position, but the market hasn't moved. You're not making any money, right? It's classic absorption. Okay, the market is being absorbed. Okay, can you see how quickly the market is now moving up? Because the person who built all these positions, 4,000 contracts, he's getting out of them now. That's good for me. So I know that this continuation is probably on. All right, now you can rewind it, think about it a few times, but it's very logical once you think about it. If someone is selling, 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 and the market isn't moving, they're getting trapped, right? It's a big problem for them. So you'll see just how quickly that guy gets out of his position. We're going to forward it a little bit here. See how quickly the market starts moving up. Okay, so I did have to wait. You can see it there, 6 or 7 minutes. I think it was around 6 or 7 minutes until it dawned on the seller that I'm not getting anything out of this. And then suddenly he just gave up. You know what I mean? Think of yourself being in a short trade. You wait, you hope, you pray, and then you just capitulate, you just give up. And that's what happened, right? He's obviously built up his position over 5, 6, 7 minutes. And then within the space of about another 3 minutes, he's given up. So can you see why my trade lasted about 10, 11 minutes, okay? And the trade is over. You can actually see it here, $1,537.50, okay? So you're not gonna see that anywhere else. This is how professional traders trade. So if you wanna build a career out of this, I don't see any other way of doing it, because if you are doing this, i.e. just using plain candles, how on earth do you know that any of this is happening? You don't, you're trading blind. So if you agree with it, no reason why you wouldn't. Check out the next video, subscribe to the channel. I can't wait to see you on the other side.